Hello, this is Scott Schubert again, and I wanted to thank everyone for the overwhelming positive responses that I received about the previous video that I made on how to trade the non-farm payroll and the FOMC statement and other big news events. And thank you so much for the feedback that you've sent me, because so many people are extremely grateful and appreciative for the things that I've showed them in this video, and I wanted to follow up on that to show you even in more detail how this worked out for this week's FOMC statement. Now, one of the things that we were looking at before the FOMC was that here on the US dollar Swiss, I've just automatically tuned the frequency. For me, it's an automatic thing to just go to a specific time frame. Well, the way that you do that is not really any mystery. It's just that if you go to the 12-hour, it's not quite as clear. And if you go to the 6-hour, then it's slightly on the short side to be able to see the turning point that we were looking for. But we knew in advance that it was the 8-hour time frame that we were looking for a turn on in this case. And we saw a turn before the FOMC happened. And now you can see that it's in the middle of the Asian session after FOMC and everything has settled. And the turn that already happened before the FOMC is still just perfectly valid, and there's no problem and there's no chaos at all. Everything is just very clear and perfect, and it's a great entry. So now you can see that if I step down in a few time frames, I can get down to the 1 hour, I see a little bit of chaos in there where there is a spiking in both directions. If I go down to the 15-minute, I can see that there was some spiking price action in both directions that produced a temporary chaos. And then the temporary chaos settled and the market went back to doing exactly what it always does. And in fact, even on the 15-minute, there's a near perfect shape of a trend that's in process, and we know that back on the longer time frame, this is just the beginning of one wave of a much bigger movement. I often look at the US dollar Swiss because it's part of the analysis for the euro versus the dollar, and I don't necessarily trade this pair because it usually doesn't move as many pips as the euro on the same piece of price action. So as it turns out, before the FOMC came out, I said that if the euro goes up, I'm not going to enter. And now you can see how nice and how clear that is and how it works out, and it does that over and over, and the rest of the market might see that there's some kind of a chaos, but if you're looking at the right thing, you just don't see it, and everything is perfectly fine. Now, in my analysis, when sorting through all the pairs yesterday during the London session prior to FOMC and during the New York session, I did not choose to enter any of these pairs. And in fact, although this is a good move, there are several good moves, this has the shape that could be an ABC that leads to a continuation up. I don't think that's what it is, but I think it's a distorted trend right inside of here, and that was an actual turning point that we've been looking for a long time. But the one that I did choose was not related to the US dollar. It's this euro pound. This pair we entered live in our webinar. It's before the FOMC, and it was a perfect, clear entry. And then I just stayed in this trade through the FOMC, and there never was any reason to get out. It didn't even look like there was any reason to get out. And the only pairs that I chose to enter, and there's always a very specific reason why we choose certain pairs, and it's not a mystery or anything, it's just a very simple thing. Which ones are clear and have the characteristics that represent a really nice trade? So this was identified on the 8-hour before it happened, and then we entered short on the euro pound. I'm still in the trade, and I'm not going to get out because I can see that very clearly that this is going to continue. Now, if you feel like, oh, the market could turn at any time, you better have a price target, take profit, and you just get out of the trade because it might turn on you. Well, eventually that view of the market will fade away when you see over and over that you can tell what the market is doing, and it's very simple. So the euro pound was one trade, and the pound Swiss, which is the inverse of the euro pound, was another, and I ended up entering on both of these pairs, still in the trade, And that's my entire strategy for the FOMC, is to just not do anything but enter these two pairs before the FOMC and to still be in them, and everything is perfect. I don't see any problem. So would you like to be able to go through day after day and month after month and have that kind of a feeling of satisfaction and confidence that everything is consistently just going really, really well, instead of having all of the feelings of anxiety and fear and frustration and so forth that people often have in trading? If so, I'm very glad to help people and show people on a daily basis how to tune your eyes, adjust your eyes, and see these things so that you can use it for your business. And very glad to hear some of the feedback that we've gotten about the previous video. So if you didn't see the first video on how to trade the non-farm and the FOMC, I'll put a link to that below here, and make sure you watch that and just watch it carefully and see if this makes sense. My whole intention of doing this is to help you to see it also so that you can make money.